share.
Alright, let's get our big management in. Then Sunil Duggal, CEO of Dabur India with us. Mr. Duggal, hi, good afternoon. Good to have you on the show. You know, I'm just reading a brokerage report wherein, it says that the management is guiding for 100 basis point EBITDA margin expansion in FY14. Where's that confidence coming from?
We believe that price increases now will kick in and will be able to mitigate some of the inflation impact through that. And also a better mix delivery, particularly in the rural areas, would enable some improvement, maybe not 100 basis points, but some improvement over last year, which is not as good as what we expected when we started off the year, but I think the EBITDA margins would go north. And there will be a little bit of help from our overseas business where we are seeing very strong growth in the margins.
So, what according to you will be perhaps the margin increase? Will it be in the range of 20 to 30 basis points or, closer to 50 basis points?
It looks to be in the range of 50 to 100 at this point in time. Still early days yet, more than 6 months of the year yet to finish. A lot will depend upon currency movements, how the international business performance happens. The domestic margins are likely to be flat to marginally positive.
Yeah, so Mr. Duggal, you referred to the rural, growth. What's been the trend in urban India? I mean, have you seen distinct signs of slowdown? And would that be an area of pressure?
Well, there has been a softening of demand, generally speaking, in urban India. A little bit more pronounced in the more discretionary areas of the business. Having said that, if you have a strong value proposition, you are still able to generate growth. So overall, a much higher level of growth is coming from rural as compared to urban.
Okay. What about, you spoke about, you have to go ahead and increase your product prices in order to aid your margins as well. How much would the product price increase be, say, in the next 3 months, and what do you plan to do for the full year?
The full year outlook is around 6%, out of which we've done around half. And another 3% or so would happen in the next quarter or maybe a little bit after that. So total of around 6% price increase is the likely scenario as far as the domestic business is concerned.
Yeah. Mr. Duggal, what about the currency depreciation? I mean, how much does that dent your margin? I mean, you spoke about an overall increase of margins, but purely the currency angle, how much does that hit you?
Well, there is a direct impact because some of our commodities are imported in dollar terms, particularly beverage concentrates. So there the impact is immediate and does shave off around 50 basis points from margins. And there's a much larger indirect impact consequent to the oil price change and all the downstream components like plastics, etc., which are now on a steeply inflationary curve. Also diesel price increases, etc., would mitigate the freight part. So overall, the impact on in the both direct and indirect would be in the region of 150 to 200 basis points.
Okay. Is there a possibility that the company could consider reducing their advertising spend in order to protect their margins or to aid their margins at a time when margins could be under pressure on account of this rupee depreciation?
Seems unlikely. I think there's going to be a little bit of media inflation consequent to the new regulation on advertising. Also, I think the core brands would continue to require the sustenance level of advertising, so we would not like to moderate there. Perhaps where we can save a little bit of money is to go a little slow on new product introductions, which take up a lot of advertising spends. But overall, I don't see advertising going below last year, not in any substantial fashion. They would be at the same level of 13.5% to 14% as was the case last year.
Yeah. Mr. Duggal, the competition has been strong. We have seen entry of some strong players as well. In terms of advertising, do you see that as a bit of a burden? Because some of your peers have clearly said that they won't compromise on advertising.
And neither will we. We will continue advertising spends. I've just mentioned that they will not be below last year. They would be probably in the same level as last year. And it's not due to any higher level of competition happening. We see competition being pretty much the same as it was, barring a category or two. I think there is a certain amount of media spends which are required to just sustain the business. And on top of it, we do see, it's not yet played out, but we do see some media inflation creeping in. So that would further put pressure on the spends. So they will not fall off. Whether we'll be increasing spends, probably not. In an inflationary year, you tend to be a little careful in how much you spend on advertising.
Mr. Dugal, all the channel checks suggest that slowdown in consumption is now a reality. What are you expecting by way of revenues? In Q1, your volume growth in the domestic consumer business was 9%, which is lower than the 12% that you all had clocked in Q4 of the last fiscal year. Are you thinking that, perhaps growth is going to be in single digits for Dabur in FY14? What is your sense?
Yes, I think, we have guided 8 to 12 and I won't change that guidance, but it's more likely to be in the region of say 9 to 10 rather than 11 to 12 as what we had hoped for a few months ago. But it'll still be strong. I don't see that 9 to 10% volume growth being something which we should be very concerned about. It's still a very strong growth.
And what about on the international side? Exports should have done well this time. What could be the growth on the export side? And how much will it contribute by way of a percentage to your revenues?
We do expect 15 to 20% growth for our international business. And we do see a better margin profile emerging from our international business. So that's really an upside. There will also be currency gains, translation gains on account of currency depreciation, etc. So overall, the international business will boost our margins as well as revenues to some extent. So it will be an upside as far as the consolidated business is concerned.
All right, Mr. Dugal, thanks a lot for taking time out and talking to us. That Dabur still quite confident about the business and saying that they will expand their margins in this year.
He was quite categorical that both on the revenues as well as in the margins, he said that it's going to be slightly less than what we had expected at the start of the year. So on margins, he said that we thought it would be 100 basis points. Now he's saying 50 to 100.
Yes.
On revenues, it was a guidance of 8 to 12%. Now he says it's going to be more likely in the 9 to 10% band.
Yeah, but the bottom line is that it will still grow. So I think that's what the market is happy about. Let's take a break on that note. Once we come back, we'll again focus on the expiry. Manoj Muralidharan of India Infoline will be with us.